Dear students, you have learned in the first year how to pass journal entries, post them into the ledger and prepare trial balance. So, when a businessman or a small trader conducts business transactions during the year, at the end of the year he is interested to know what is the profitability from his business. Students, it is the same thing as when you study for an entire year and at the end of the year you prepare for the final exam, you appear for the final exam and your performance is assessed on the basis of the marks secured. So, similarly, a businessman also is interested to know at the end of the year that what his business is performing, how the business is doing, whether the business is making profits or it is making losses. So, today we shall study that how does a businessman come to know about this. So, he prepares final accounts. Now, what are final accounts? The statements which are prepared at the end of each accounting year to know the net result of a business during the year and the financial position at the end of the year are termed as final accounts. A more appropriate term would be financial statements, but we would be making use of the term final accounts during the course of our discussion. Now, from there it follows that why are these accounts prepared? That means what are the objectives of final accounts? Final accounts are prepared to know the net profit or loss of a business during one accounting year, and the second objective is to know the financial position of a business as on a particular date. Now, here I would like to highlight what is this financial position of a business. The financial position of a business actually says that what the business owns, that is what are its assets, what are its properties and what is it that the business owes. Owes means what are its liabilities, liabilities to the outsiders, and also what is the capital of the proprietor as on a particular date. So, these objectives of final accounts are the twofold objectives of final accounts. Now, let us take a look at what the final accounts consist of. The final accounts consist of trading account, profit and loss account and balance sheet. This trading account and profit and loss account are otherwise also called as income statements. For a trading concern, that means a concern that is involved in buying and selling of goods, that is called as a trading concern, they prepare trading account, profit and loss account and a balance sheet. This trading account and profit and loss account, which is otherwise also called as the income statement, whereas the balance sheet is also called as a position statement. Now, that is why I said that final accounts is not the appropriate term, because trading account and profit and loss account both are accounts, whereas a balance sheet is a statement about which we shall be discussing in greater detail later. And besides that, if it is a manufacturing concern in addition to preparing these accounts also prepares another account that is called as the manufacturing account. That means for them they prepare a manufacturing account, trading and profit and loss account and a balance sheet. So, now let us take a look at what is trading account. A trading account is a financial statement which shows the result of buying and selling of goods and or services during an accounting year. Now, why is it prepared? It is prepared to find out the gross profit or the gross loss incurred during the accounting period. That means what is the gross profit earned by the business or whether the business has incurred a gross loss during the accounting period. That is why we prepare a trading account. Now, what is the nature of a trading account? The trading account is a nominal account. Nominal account, as you must all remember students, that nominal accounts basically relate to accounts relating to expenses and losses and incomes and gains. So, the nature of a trading account is basically that of a nominal account. How do we prepare this trading account? Now the question comes, you all must remember that you had prepared trial balance. A trial balance is basically the account of the balances of the various accounts. So how do we prepare them? The balances of different accounts which are appearing in the trial balance related to the trading account, they are to be closed by transferring them to the trading account, and such entries are called as closing entries. So we pass certain entries to close those accounts, some nominal accounts which relate to the trading account. Now let's take a look at which are those entries. Some accounts show debit balances. So which accounts shall we take into consideration? We will take the opening stock, purchases, direct expenses and sales return. So the entry that we pass is trading account debited to opening stock account, to purchases account, to direct expenses account and to sales returns account. Now direct expenses means, students, all those expenses which are directly related to purchases, and the second closing entry that we pass will be relating to the accounts which are showing credit balances, the two accounts, that is sales and purchases returns. So both of these accounts shall be closed by transferring them to the trading account. So the entry that we pass is sales account debited, purchases returns account debited to trading account. Now let me talk about closing stock. So we have to pass an adjustment entry for closing stock, because closing stock is also another item that would be dealt with in the trading account. Now, so the adjustment entry that we pass for closing stock is closing stock account debited to trading account. Now here the closing stock account is opened. So closing stock will appear on the credit side of the trading account and also on the asset side of the balance sheet. Remember, students, that closing stock will be valued either at cost price or the net realizable value, whichever is less. And ultimately, to close the trading account, how do we close? We have to total both the sides. We will take a look at the totaling of the credit side. If the credit side is heavier, there will be gross profit. So for gross profit, the entry that we pass will be trading account debited to profit and loss account, and for gross loss, the entry will be profit and loss account debited to trading account. So now let's take a look at the format of a trading account. So when we prepare the format of a trading account of Messrs, for which business are you preparing? If the question gives you the name of the business for which you want to prepare, you will write down the name of the business for which you are preparing the trading account, and below that we will write for the year ending, because we are preparing for a year ended. So if you are, usually the accounting year starts from April 1st and ends on 31st of March. So mostly according to the question, you will mention the date which is the year ended, and then we have columns as depicted in the slide. You can see we have the debit side and the credit side. The formatting of a trading account is exactly like that of any account. So on the left hand side we have the debit, and on the right hand side we have the credit. Particulars column. In the particulars column we will write down to opening stock. So the first item that appears on the debit side of the trading account is the opening stock. If it is a running business, then whatever is the stock that is unsold at the end of the previous year, that will be the opening stock for the current year. So the value of the opening stock will be put in that amount column. The next item that comes is on the debit side is to purchases. Purchases is the items or the goods which the business buys for the purpose of reselling. If there are any returns, that will be deducted from the purchases and taken to the outer column. The next item that we have is to direct expenses. As I already said, the direct expenses are all the expenses that are related to purchases. So expenses like carriage inwards, wages, power and fuel, octroi, factory expenses and other direct expenses, if any, they all shall find a place in the debit side of the trading account. Now let's come to the credit side. On the credit side we have buy sales. Sales here includes both cash sales as well as credit sales, and from the sales we will deduct if there are any returns. Sales returns, if any, shall be deducted from the value of the sales, and what we get is will go to the outer column. The next we have is closing stock. The closing stock value shall be given to you below the trial balance. So, we will take it from there, that what is the value of closing stock, that shall be inserted in the credit side. Now, once you have inserted all of those credit balances and debit balances that relates to trading account, the next thing we need to find out the total of the credit column and also the total of the debit column. If the total of the credit column is heavier, then there will be a gross profit. So, this gross profit is transferred to the profit and loss account, and if there is a gross loss, just the vice versa, that is, if the debit side is heavier, then there will be a gross loss. This gross loss also will be transferred to the profit and loss account. Now, there is another way of dealing with or finding this gross profit. There is an equation of a trading account. So, let us take a look at that equation. Gross profit is the excess of net sales over cost of goods sold. How do we find out this net sales? Net sales is equals to cash sales plus credit sales minus sales returns, if any. That will give you net sales. And how do we find out the cost of goods sold? The cost of goods sold will be calculated with the formula, that is opening stock plus net purchases. Net purchases here means cash purchases plus credit purchases less returns, if any, plus direct expenses and minus the closing stock. That will give us the cost of goods sold. So, if we have net sales minus cost of goods sold, that will give us the amount of gross profit. Now, students, let us take a look at the problem for an easier and a better understanding. The problem is from the following balances as on 31st March 2019, prepare a trading account. So, you are given certain information in the particulars column. You are given stock on 1/4/2018, the amount is 25,000. Stock on 31/3/2019, it is 26,500. Next we have purchases, that is 1,70,000. Next item we have is sales, that is 2,47,000. Then we have carriage outwards, that is 13,000. The next item we have is return inwards, 5,000. Next we have return outwards, that is 7,000. The next item we have is wages, 16,000. Carriage inwards, 10,000, and next commission paid on purchases. Students, just take a look at all of these items carefully and let us scan through them. Stock on 1/4/2018 means it is opening stock. Stock on 31/3/2019, that implies it is closing stock. Then we have the value of purchases. We also need to take a look whether there are any returns. Yes, the question is showing us a returns, that is purchases returns or return outwards, that is 7,000. Next item we have is sales, that is 2,47,000. We will also take a look simultaneously whether there are any returns in the question. Yes, the question is showing us a return inwards also, that is of 5,000. Then we will take a look at whether there are certain direct expenses in the question mentioned. We have carriage outwards. Is carriage outwards a direct expense? No, it is not a direct expense because it is incurred on selling the goods. Then we have wages. Wages is a direct expense. Carriage inwards, that is a direct expense because it is incurred on purchases. And then we have commission, which is paid on purchases. This is also a direct expense. So, students will work on this problem and I will show you how to work or how to find a solution to this problem. taken a look at the problem. So, the problem, we are going to take a solution to this problem, that how this problem will be solved. So, let us see how this problem is going to be solved. So, first we will prepare the format, trading account, of, we do not know, the name is not given, so we will just leave it blank, for the year ended. For the year ended, here we have been given 31st March 2019. Now, we will prepare the format of the trading account. It is the same like that of the account as I already said. So, you prepare columns. For a better visibility, we can have a double line segmentation for the debit and credit. If you want students, you can have two columns, one for the internal calculation, one for the external calculation for the amount. This side we have is the debit side, and the right hand side we have the credit side. The first column is the particulars column. Then we have amount column, amount in terms of rupees. Then we have again the particulars column, and then we have the amount in rupees. So, now let us get started. The first item, as I already said, that we will be having opening stock. So, to opening stock. The amount of opening stock given to us in the question is 25,000. Next item we have is to purchases. Purchases amount, a figure given to us is 1,70,000. Students will write that in the inner column because we have a calculation. So, to purchases 1,70,000. Again we have less returns. We have purchase returns, and the amount of returns we have is 7,000 purchases returns. So, 1,70,000 minus 7,000, that gives us 1,63,000. Next item we have is, now we are looking for the direct expenses. So, in the question given to us, the direct expenses we have is, we will go sequentially. As I already said, carriage outwards is not a direct expense. We have wages. To wages, the amount is 16,000. Next item we have is, the next direct expense, to carriage inward. Carriage inwards amount we given to us is 10,000. Do we have any other item? Yes, we have commission paid on purchases. So, to commission paid on purchases. The amount of commission paid is rupees 12,500. Then we will just take a look at the question. Do we have any other direct expenses? No. Let us now move to the credit side. As I already said, on the credit side, we will be starting with sales. So, by sales. The figure for sales given to us is 2,47,000. Students, since we have an internal working, so we will write that amount in the inner column, 2,47,000. Now, we have sales returns, that is, we have return inwards. So, less returns. We can write returns inwards, we can write sales returns. The amount given to us is 5,000. So, 2,47,000 minus 5,000, that gives us 2,42,000. Now, the next item we will be having is closing stock. So, by closing stock. In the question says us that stock as on 31/3/2019 was 26,500. So we'll write here by closing stock 26,500. Now let's take a look whether the credit side is heavier or the debit side is heavier. So let's do the totaling for the credit side. What is the total of the credit side? Students, let's do the totaling. We have 500, then we have 6 plus 2, that is 8, 4 plus 2, that is 6. So that is 2,68,000. And let me just erase that for you. 2,68,000. Now let's take a look at the debit. What is the total of the debit column? We'll not do the totaling directly over here. We'll do it in the rough working. So let's take a look. 25,000 this totaling. We have again, say in a rough working we are doing 500 is the total here. Then 2 plus 6 is 8 plus 3 is 11, and then we have 5, 11 plus 5, that is 16. So 6 carry 1. We have 2 plus 1, 3 plus 6, 9 plus 1, 10, 11 and 12. So we have 2 carry 1, 1 plus 1 is 2. So the total of the debit side, students, is 2,26,500, and this is obviously less than the total of the credit side. So we'll find out what is the difference. 2,68,500 minus 2,26,500. Students, that gives us 42,000. So we know clearly that we have a gross profit, and the gross profit is 42,000. So we'll write 2 gross profit. Either we can write carried down, or we can write gross profit transferred to profit and loss account. It is the same thing. Since the profit and loss account is an extension of this trading account, which we shall discuss in detail, so you can write it either ways. Now we'll do the totaling. Students, please remember that both these totals should be on the same plane, and then we'll close this account. So this is a trading account. Let's again go through it quickly. We started with trading account of, if the name of the business person or the businessman is given, or the name of the trader, the trading concern is given, we'll write the name. Then we'll have for the year ended, what is the year ended for which you are preparing this, that will be given in the question. Then we chalk out the format. It's the same as that of an account. We have the debit side. On the debit side we have opening stock, then we have purchases, we have deducted the returns, we have to wages, then carriage inwards, commission paid on purchases. Then we went to the credit side, we incorporated sales, less returns, and then we have closing stock. We did the totaling, and then we found out that there is a gross profit of 42,000. So students, you need to work with more of different problems related to trading account, and some important point I would like to discuss regarding the preparation of trading account. That is, if you come across the term adjusted purchases, when the term adjusted purchases or cost of goods sold is given in the trial balance, it means that the figures of opening and closing stock have already been adjusted in the amount of purchases. In such a case, neither opening stock nor closing stock appears in the trading account. And remember that if closing stock is given to you and you are given two values, cost price value and also the market price or the net realizable value, then we will have to take that figure whichever is less. So now students, today in this class we have discussed that what do we mean by final accounts, what are the objectives of final accounts, and what the final account consists of, which statements, and we dealt in greater detail regarding trading account, what is a trading account, and how to prepare a trading account. We have also taken a look at the format, and we had worked out a problem on trading account. So, in the next session, we shall be discussing in greater detail regarding the profit and loss account. Students, in this session, we are going to take a look at the profit and loss account. What is a profit and loss account? The meaning: a financial statement which shows the financial performance of business during an accounting year. That is the meaning of a profit and loss account. Now, why do we prepare a profit and loss account? A profit and loss account is prepared to find out the net profit earned or net loss incurred during an accounting period. As we have seen earlier, the trading account is prepared to find out the gross profit or gross loss. This profit and loss account is basically prepared to find out the net profit or net loss which has been earned during the accounting period. Now, what is the nature of profit and loss account? It is also a nominal account like trading account. So, in the profit and loss account as well, we will take into account the balances relating to expenses and losses and incomes and gains. So, it is a nominal account. Now, how do we prepare profit and loss account? You remember, students, in the trial balance, we have taken certain balances which were taken to the trading account. Now, those other expenses and losses and incomes and gains, that means all the other nominal accounts which were not taken to the trading account, will now find a place in the profit and loss account. So, what is the first step in the preparation of a the profit and loss account? The first thing, whatever is the gross profit or gross loss that was incurred or that we had found out in the trading account while preparing the trading account, that will now be brought from the trading account to the profit and loss account. The second thing we will need to find out is that all the indirect revenue expenses and losses which are relating to the current year only, whether they are paid or outstanding, irrespective of the fact if a particular expense relates to the current accounting year, then that is taken to the debit side of the profit and loss account. Similarly, all the indirect revenue incomes or gains that relate to the current year, irrespective of the fact whether we have received them or they are accrued, they all appear on the credit side or credit side of the profit and loss account. That means, we will consider or take into account only all those indirect revenue incomes and gains which did not go to the trading account. And finally, after posting all of these balances, we will again take a look at the credit side. If the credit side is heavier than the debit side, there will be a net profit, and if the debit side is heavier than the credit side, then there will be a net loss. So, here also we pass certain closing entries. Now, what are the closing entries that need to be passed? To close the accounts of indirect revenue expenses and losses, the entry that is passed is profit and loss account debited to concerned items of expenses and losses individually. Students, individually, whatever expenses and losses are given to you, they will be credited individually. Profit and loss account will be debited and all the expenses, they will be credited. And next is, we will close the accounts of indirect revenue incomes and gains. So, whatever are the figures that are appearing in the question relating to indirect revenue incomes and gains, we will debit them individually and credit the profit and loss account. So, the entry will be the concerned items of incomes and revenue individually debited to profit and loss account. Now, how do we close the profit and loss account? In case of net profit, if there is net profit, that is, the credit side will be heavier or greater than the debit side, then the entry will pass as profit and loss account debited to capital account. And in case of net loss, that is vice versa. That means, if the debit side is heavier then the credit side, then the entry that we pass is capital account debited to profit and loss account. Students, the closure of profit and loss account, how do we close the profit and loss account? If there is a net profit, that means the credit side is heavier than the debit side, then the profit and loss account is debited to capital account. The entry that we pass is profit and loss account debited to capital account. And in case of net loss, that means the debit side is greater than the credit side. In that case, the entry that you pass will be capital account debited to profit and loss account. Now, let us take a look at what is the format of the profit and loss account. You must be wondering, what is this indirect revenue, expenses and losses, indirect incomes and gains? So, students, just keep in mind that what are the various accounts or the kind of expenses we will be considering in the profit and loss account. Basically, we will be dealing with if you come across any kind of office expenses, selling expenses, financial expense, or you come across any kind of other kinds of expenses like maintenance expenses, then they will all come to the debit side of the profit and loss account. So, let us take a look at the format of profit and loss account to understand in a better way what are the expenses that are debited to the profit and loss account and what are the expenses, what are the incomes and gains that are credited to the profit and loss account. So, let us have a look at that. The profit and loss account, as I said, is also an account. So, the formatting is the same, but here we will write profit and loss account of the particular concern for the year ended. The pattern is the same as in case of trading account for the year ending or ended, whatever date is given to you, and then we chalk out the format, that is the lines for the particulars column and the amount column. It is also in the shape of an account, so we will have a debit side and a credit side. So, all the expenses and losses go to the debit side and all the incomes and gains go to the credit side. So, we have a credit side and then we will fill in these. The first column we have is the particulars column, then we have the amount column, next we have the particulars column and again the amount column in terms of rupees. Now, let us take a look at what are the items that appear. Now, students, it is an extension of the trading and profit and loss account. So, if we have a gross profit, the gross profit will be transferred to the credit side. So, by gross profit brought down from the trading account, we will write the figure over here. And then next, let us come to the debit side. What are the items? To salary. Salary paid to the employees of the office or the warehouse, that salaries will be on the debit side. Certain common examples of indirect expenses: to rents and taxes, if rent is paid then rents and taxes will be there, to telephone expenses, to general expenses, to bank charges, if the bank is debiting any charge to our account then bank charges. Next we have to audit fees. If fees is paid to the chartered accountant, that is the audit fee, that is also an expense for the business. To discount allowed, if we have allowed any discount to our customers, that is an expense for us, so that will also be debited. Next we have is depreciation. Depreciation is the fall in the value of the asset because of usage, passage of time. So, we also provide for depreciation on the debit side of profit and loss account. Next we have to advertisement. If any expenses are incurred on advertisement, that will also find a place in the debit side. To salesman's salary, to manager's commission, to all other kinds of indirect expenses that you find up. Now, come to the credit side. On the credit side, we have by discount received. If any discount has been received, then that will be shown on the credit side. By dividend received, by interest received, by commission received, Any bad debt has been recovered, then that will also find a place in the credit side. By miscellaneous expense, any kind of miscellaneous incomes or any other kinds of indirect income, students, that will come to the credit side. Again we will do the totaling of the credit side, and if we find that the credit side is heavier than the debit side, then we will see that there is a net profit, and this net profit is transferred to the capital account. So, students, that is the format of profit and loss account. Students, now we will take a look at a problem on profit and loss account. So, let us go through the problem. The following balances were extracted from the books of Mr. Sareen for the year ended 31st March 2019. You are asked to prepare a profit and loss account. So, you are given certain information. We have been provided with gross profit of rupees 1,50,000, salary 34,000, rents and taxes rupees 12,000, fire insurance rupees 5,000, rent received rupees 17,500, bad debt rupees 4,000, interest received rupees 7,700, capital rupees 5 lakhs, brokerage paid is rupees 5,750. We have telephone charges of rupees 3,600, printing and stationery rupees 2,400, discount allowed 5,250, discount received 4,100, carriage outwards 7,000, domestic expenses 3,000, travelling expenses 1,500, machinery is shown at rupees 70,000, and the manager's salary is rupees 20,000. Now, you are provided with all these informations. So, how do we go about? Now, first thing you need to do is scan through the question and find out which are the items of expenses, the indirect expenses. So, if we take a look at, we will just leave gross profit, then we have salary, will go to the debit side of profit and loss account. Next we have rents and taxes, that is also an indirect expense, so that will also go to the debit side of the profit and loss account. We have fire insurance, that again goes to the debit side. Next we have rent received, we have bad debt, rent received. Students, rent received will go to the credit side because it is a receipt, it is not an expense, it is an income. Bad debt means the amount which our customers have not given us, so it is an expense for the business. Interest received, we have received an interest from the bank investment, so that is again an income that will go to the credit side. Capital, student, capital will not come in the profit and loss account because it is not any item of expense, or it is not an item of a loss, or it is neither an income nor it is a gain. So, it is the capital which has been invested by the proprietor, it will not find a place in the profit and loss account. Next let us talk about brokerage paid. Brokerage paid is again an indirect expense because some amount of brokerage has been paid to the agent. Next item is telephone charges. Telephone charges is also an item of indirect expense. Printing and stationery as well, that is also an item of indirect expense. Discount allowed, we have allowed discount to our customers, so that is an expense for us. Discount received, we have received discount from the supplier, that is the businessman has received discount from his suppliers, so that is an item of income. It will go to the credit side of the profit and loss account. Carriage outward, it is an expense, indirect expense, so it will go to the debit side. Now, students, another we can have information over here is domestic expenses. Domestic expense is a personal expense of the proprietor. So, any kind of personal expenses do not find a place in the profit and loss account. If any kind of personal expenses like life insurance or domestic expenses, or you come across any such kind of information which is a personal expenses of the proprietor, they will not come or fall in the profit and loss account. They will not be taken into consideration. Next we have travelling expenses, that will go to the debit side of the profit and loss account. Then we have machinery. Again, machinery is an asset, so it is not an item of profit and loss account. And then we have manager's salary. Yes, of course, manager's salary, that is an expense of the business, so it will go to the debit side. So, students, let us take a look at the solution, how we work out this problem. So, we have the format over here. The first item we have in the question is gross profit. So, we will go right on the credit side. By gross profit brought down, that is 1,50,000. The next item we have is salary. As I already said, salary will go to the debit side. So, 2 salaries. Now, students, at times you will also come across the term as salaries and wages. So, if you come across the term salaries and wages, that will also come to the profit and loss account. But if you come across wages and salaries, then that will go to trading account. You need to keep that in mind. So, the amount of salaries we have is 34,000. Next item we have is rent and taxes. So, to rent and taxes. The amount for rent and taxes is 12,000. Next expense we have is fire insurance. So, the fire insurance premium is paid. The amount of fire insurance given to us is rupees 5,000. Next item or next expense we have is bad debt. The amount of bad debt appearing in the question is 4,000. Next expense we have is interest. The interest received is not an expense, student, that will go to the credit side. All the credit items, let us leave it for now. We will only consider the expenses. Capital will not go to the PL account. Brokerage paid. So, brokerage paid is an expense. We will write the brokerage paid. The brokerage paid amount is rupees 5,750. Next we have telephone charges. The telephone charges, so 2 telephone charges. The amount of telephone charges given to us is 3,600. Next expense we have is printing and stationery. So, we will write printing and stationery. The amount of printing and stationery is 2,400. Next item we have is discount allowed. Discount allowed is an expense. Already I have discussed that with you. So, discount allowed, the amount is 5,250. Next we have is discount received will go to the credit side. We have carriage outward. So, carriage outward. The amount of carriage outward is 7,000. Do we have other expenses? Yes, we have traveling expenses. So, traveling expenses, the amount of traveling expenses is 1,500. We have yet another expense, that is manager's salary. So, 2 manager's salary. The amount of manager's salary is 20,000. So, let us now go to the credit side and see what are the items that will fall on the credit side. We have the first item there is rent received. So, by rent received. The amount of rent received given to us is 17,500. The next item we have is your interest received. So, the amount of interest received given to us is 7,700. And then we have discount received. So, by discount received. The amount of discount received is 4,100. Students, the discount received amount is 4,100. Now, let us do the totaling on the credit side. The total of the credit side should come to 1,79,300. Now 1,79,300 is a total on the credit side. So what is the total on the debit side? The total of the debit side total, it should come to around 1,05,000. So it is clearly evident that the credit side total is heavier, that is 1,79,300, whereas the debit side total is 1,05,000. So we clearly have a net profit over here. So what is the amount of net profit? 1,79,300 minus 1,05,000, and that should come to 78,800. So we have a net profit. So we will write over here to net profit transferred to capital account. As I already said that the net profit is transferred to capital account, and ultimately in the capital account this will be added. So the amount is 78,800, and we will do the totaling the same way, 1,79,300. We will erase this working and the account closes. So that's the profit and loss account. That's how you find out the net profit. Now let's have a again let's take a look at this profit and loss account. What are the items that we have entered on the debit side? We started with all the revenue expenses, that is indirect revenue expenses. We had first we brought down the gross profit, step 1. Then we debited all the items of expenses and losses that were given in the question. We have salaries, rents and taxes, we have fire insurance, bad debt, brokerage paid, telephone charges, printing and stationery, discount allowed, carriage outwards, traveling expenses, manager's salary. Once all the debit items, all the expenses have been entered on the debit side, then we move to the credit side to basically enter all those items of incomes and gains that are given to us in the question. So in the question we have been provided with the income, that is rent received amount 17,500. We have also been provided with interest received 7,700. We have been provided with discount received 4,100. After we have debited and credited the respective items, the next thing we did the totaling of the credit side. The credit side total came to 1,79,300, and then we did the totaling for the debit side. The debit side total came to 1,05,000. Here in this case our credit side is heavier, so there is a net profit, and this net profit is transferred to the capital account. So students, this is the way in which a profit and loss account is prepared. So a profit and loss account, basically we start with the gross profit and then we debit all the items of indirect expenses and losses, we credit all the items of indirect gains and incomes, and then if the credit side is greater, there is a net profit. If the debit side is greater, there is a net loss. Students, in this session we have seen what is a profit and loss account, what is the meaning of a profit and loss account, why do we prepare a profit and loss account, what is the format of preparing a profit and loss account, what are the items that go to the debit side of the profit and loss account, what are the items that go to the credit side of the profit and loss account. We have also taken a look at a problem and we have also solved the problem. So students, you should work out on more problems relating to profit and loss account and work on more of those aspects and take a look at the different kinds of revenue, expenses, losses, incomes and gains. Thank you.